take the honor of introducing the first three guest speakers for the day, Mr. Arvind Kapil, Mr. Ramesh Lakshminarayanan, and Mr. Rathor. To start with, Mr. Arvind Kapil is the country head, retail assets at HDFC Bank, and manages the largest leading book in the bank, including unsecured loans portfolio, auto loans business, loans against property, two-wheeler loans, retail working capital loans, gold loan, loan against shares, microfinance, home loans, and business loans. Well, it's a long list, sir. Marcellus clients should also know that HDFC Limited mortgage book will also be managed by Mr. Kapil now. An integral part of the bank's growth journey for over 21 years, Mr. Kapil has introduced industry-leading innovations that offer unparalleled convenience using technology as an enabler. These include arguably the fastest loan in the world, which is called the 10 seconds personal loan. An alumnus of Harvard Business School, he successfully has completed an advanced business management program from Harvard's and the master's program in management of global enterprises jointly from IIM Bangalore, UCLA Anderson, SDA Bocconi, and City University. Thank you, sir, for joining us. Mr. Ramesh Lakshminarayanan is the Group Head, Information Technology at HDFC Bank. Designated Chief Information Officer, he is responsible for the bank's tech strategy and for harnessing new-age artificial intelligence, machine learning technology solutions for the bank. Mr. Ramesh joined the bank from CRISIL, where he spent 3 years as Chief Technology and Information Officer. In this role, he was responsible for transformation of CRISIL's business by leveraging technology, data, and analytics. He joined CRISIL after a big data and analytics startup called Pragmatic Services Private Limited, which he co-founded, and that later was acquired by CRISIL in 2017. An industry veteran with over 25 years of experience, Mr. Ramesh has held leadership positions in organizations like Citibank, ABN AMRO, Kotak Mahindra Group. And along with Mr. Ramesh is Mr. Anjani Rathor, who is the designated Chief Digital Officer and is responsible for taking the bank's digital transformation journey to the next level. Mr. Rathor graduated from IIT Kharagpur and IIM Calcutta and has more than 20 years of experience. He had started his career from Citibank. In his most recent position, he served as the Chief Information Officer of the consumer business of Bharti Airtel. An industry veteran with over 23 years of experience, Mr. Anjani brings with him rich and diverse experiences across sectors such as banking, consulting, aviation, and telecom. Prior to Airtel, he had leadership positions with organizations such as Boeing, Accenture, and Citigroup. Now, without further ado, I would like to invite Mr. Arvind Kapil on stage. Thank you, sir.
No, how do you connect? What about the presentation? Yeah, this. You can change it if you like. I'm okay. Very good morning. First of all, a big congratulations to Saurabh and the entire team, Marcellus, for a fantastic. I think I was sharing with him that it's a dream he's living, and I'm talking more as a professional. It's a dream every professional lives, that can you kind of leave the comfort zone and start something as beautiful as last 5 years whatever we've seen these set of professionals do. So big round of applause for them, I think. Let me start with that. Takes courage and a fair amount of intellect. So all the best to them. Thank you so much for having us here. As HDFC Bank, my aim would be for the next 15-20 minutes to kind of take this opportunity to take you through our line of thinking. Irrespective of the multiple strategies that we do, it's important that we share what was the line of thinking of the various digital products that we took out. There's a lot of questions on technology, a lot of questions on application agility. So let me take a quick 20 minutes, so just be with me. It's going to be a very precise point-by-point stuff and the stuff that we do. Let me start with, of course, we labeled out, hello.
Hello.
Yeah, no problem. It's okay, give me the mic when you're ready. I kind of put my thoughts behind, what is that one factor or couple of factors. So I'm going to build the story around as to how step by step we did it. Sorry, I just move around in a presentation. I'm more comfortable this way. I took the story straight to from where we started our digital journey. It was an ecosystem. What all was happening at that time? How did we react to that? Because that's going to tell you as to how we'll respond from here on for the next 5 years. Look at the retail lending, and that's what I head right now in the bank. Did we take out the first E2E digital offering? What's the background of the industry at that time? What is the four-pronged strategy? That's our value system. We don't kind of waver too much on it. What is the connecting dots that makes us differentiation? I'm trying to make as much effort to be as precise so that it's brass tacks. I'm not an analyst, so that's the disclosure. I run the business on the ground. So these are armies on the ground and I waver accordingly. What we created to creating the home loan momentum, that's the most important one. And I do believe the home loan will be a takeoff point for the bank. And I'll share with you why. A quick sense of, when a lot of people talk about digital, and a lot of CEOs across the industries talk about digital, I thought I'll just put it on the table. We're not very vocal about it, but off and on we do take out when they get launched and then we don't talk about it properly. We never advertise these products. But if you look at the retail lending basket, we launched 10 seconds loans, which is, even now we do a couple of thousand crores of business from our existing liability base. If you look at the latest, after that, once we cracked this one, we went on to loans against shares. We didn't invent loans against shares. We didn't invent loans against mutual funds. We digitized it. I remember having some 14 meetings with the regulators to show them the 10 seconds loan, which had no correlation with the loans against shares, to say that you can completely bring it down. What did it do? You heard Saurabh say that a lot of these billion-dollar clubs are emerging in the tier 3, tier 4 cities. How do you service these customers there? These are thin margin businesses. The unsecured is a very high margin business. But if you got to run scale on these two businesses, it used to take 7 days to process the loan. Now it takes 3 minutes on your net. So these are the real stuff. Did anybody do this in the industry? No. But this is all these products that you see, whether it was the car loans that we've recently launched, when we're already 25% plus business on it, which is fully digital. I think there are not too many scheduled banks in the world who could probably tell. Well, I can tell you safely for America and Europe, where you probably have friends and relatives from India. You can just check which bank you do. Do you have an offering where you can go onto your net banking? And as a customer, all you say is that, how does it change my life? So as a banker, my objective is that, does it change customer's life? Does technology make a difference to him? If I have an account, can I 24 hours by 7 take a personal loan? The answer is yes. Can I digitally just go and can you enable me to take a car loan? So I could take a test drive, come back, sit with my family, decide which car. There are 4,000 odd dealers listed. You just have to go choose it, get an approval done, and we'll disperse it to the dealer of your choice. It's a very simple, practical, on the ground application. So all our technology stuff is extremely application oriented, keeping the customer application in mind. Does anybody in the industry have these four? My view is no one runs this on scale so far. And it's almost 6, 7, 8 years, I think we've launched the 10 seconds. Just to give you a sense. So it's not that easy to substitute. So I hear technology, I hear usage, you can create great interfaces, but how much of it gets used for business is always a question that bankers ask themselves. Yes, of course, we are excited about coming up with our open market. There's a business loan that we're almost going live with. We're testing our final stages. There's a personal loan we're going live with. The reason we took so long is because for us, risk management is not an option. So digital for us doesn't substitute risk management. That was our fundamental value system, which I'll share with you, and that's what stays. So if I remove the risk management, my digital can go surmountably high, and then I'm playing blind. So as a banker and a responsible banking system, you can't do that. And that's what creates a differentiation on the quality that we're talking. I thought I'll just take 30 seconds, very self-explanatory. When we started off this journey, this is what was getting discussed at that time, 6 years, 7 years ago. Credit bureaus were at developing stages. Credit risk in the bank was cutting edge for us, and it still is. No one in the industry had a real grip on digital, but everybody was talking about it with great confidence. Internet was there, however, the search engines were sort of developing. The consultants was trying to connect the dots on the digital without much success. Because the real stuff is if you can run it on scale. If you run pilots, I can announce it. But if you can run it on scale, then it proves the mettle of if you claim you have digital. The best way to check anybody who says you have digital is what has changed in your application side. And if you can prove that, I think that holds ground. Analytics was another important stage, was very nascent. And I'll tell you how these dots connect. So basically, underwriting, the technology infrastructure, and technology and analytics, these three were working and independent to each other. What we really did before the 10 seconds loan, which completely transformed our application side and our output, was we got this together, and to begin with, this information dots were connected with analytics. And because they were working in isolation, you could make sense out of, you were still taking all existing customers' documents as though it was a square one story. Today we have fair visibility and advancements that you can virtually do everything seamlessly because this. So we were pioneers in this at a point where the world didn't know how to get onto digital on application level. Everybody showed videos and stories of people running, and at a click you could, while you're jogging, you can access your account, and then at a click, you could get a loan. But all that they envisage is what step by step we managed to crack. So I would admit that they were inspiring stories for the CEO. Everybody was losing their sleep, but no one knew how to do it across the world. So it was just one sec. So on the technology side, I think what changed was not the pure technology, but the credit risk algorithm abilities. So credit with technology created a different mix and a different sauce. It's not the same as having new technology because everybody can substitute your new technology. Let's say you tell me, an ex-IT company, the best company, we've got the best system. Does that really create a differentiation? Yes, it adds value. But does that really add value to the life of customer? No, unless you mix it with some sauces and make it worth really beneficial to the customer. And that's, in simplistic terms, the algorithm that we created, and I'll cover that a bit. The analytic is the in-house credit decisioning. Everywhere, if you notice, every piece we are connecting with the way our information gets processed, cleansed, and it is valuable for us to take a decision. Then it changes your life. So technology, again, has to be for application. And of course, savings account for banks is the raw feeder, and that's a brilliant base. So the greater you grow the savings account, and if you have these above 3 skill sets, you're kind of going to run into a massive advantage. So our strength was the process that we re-engineered. That's what I would give credit to. Entire process with few clicks. The turnaround time is been of essence to the bank because I think speed matters. Credit buying analytics, which I just covered, and liability franchise, plus creating visibility to the customer. So across all touch points, which is much common factor all across, but that was not how it started off. So if you see, what we created changed the whole landscape. Loans against shares, we have close to 80% of that. We've got 20% on physical. This I'm talking of the entire business. You're talking about the unsecured loans, we're around 35. We're partially digital around the rest 60%. And now we are opening up the open market pieces. If you look at the two-wheelers, that's much easier to achieve, but the risk is high, so we've still kept the E2E at 26. But digitally, we could have actually crossed the line if we wanted just to prove a point. Auto loans, we've actually managed to do around 24. This is a very complex product to get digital out in the market because there are a lot of stakeholders in the game. It took us almost 2 years, 2.5 years to get that off the ground. But no one else has it by a mile. But for us as a system, I think our strengths have always been to keep it extremely tight. If you see, some of the other aspects we are noticing is that your growth rate in the semi-urban and rural is nearly 2 times. Even if you look at the unsecured biz, surprisingly 70% plus is happening in units beyond the tier 1 cities. And that's the new India that's emerging even on a granular scale. I remember you just now said that there's $1 billion. I think there's a whole world getting created even on the bottom of the pyramid or the middle management. The middle class is transforming there, getting more comfortable with loans. So if you don't have a digital network along with a physical network, this fusion will create a value for the next 5-7 years. Because while there is digital, I think you need as much amount of strength on the physical side because a lot of money, a lot of young people are great to acquire. Digital costs are running an advantage over physical costs, but the money is also with a lot of senior citizens from a banking perspective, and they're pretty much around. They didn't have computers when they did engineering, and they are still substantially tech savvy, but they're far more comfortable sitting across and talking. So there's a new meaning of wealth advisory that's coming in even from a banking perspective. So I think this is looking like a very small slide compared to what Saurabh covered. It's a far more, so go with his assessment. This is purely our business. Few points that matter to us. We found that 90% of the car buying journey ballpark actually go online. And that was the fundamental basis on which how we started saying if 90% go online, why are we on the physical world? So that's how we started. Just to give you a sense of how the bank thinks. It said 60% of internet users product the purchase. So there was a lot of purchase happening here. If you look at 80% of the largest digital payment player volumes are in the tier 2 cities. I shared with you the unsecured patterns that we have on the ground. When you add some of these figures to it, very clearly a hell of a lot of business. A new India is emerging out of the tier 2 to tier 4 cities. And that's a lot of physical plus digital. It's going to be a mix of that for the next 5-6 years. 60% of overall, of course, leaving the kids and all, but by and large, every lender is fully bureau covered. So our risk ability to shift to algorithms more is a great time. And that's a strength we have. We've been a little cautious, to be honest with you, because we're not very comfortable compromising risk to digital. 40 to 70%, if you say digital lending over 40 to 70 low acquisition costs, actually if you compare digital and if you take a lifetime value to cost of acquisition, it's almost 1.5 times in favor of the digital. And if you see the deposits, you'll see a strength that a lot of these digital customers are probably ages of around 35 and lower. They have less deposit, but great future earning, great future potential, great future deposits, great future lending, which is predominantly unsecured, but that pattern will change. Yeah. This is just a single slide on the express car loans, which is basically nothing but your digital auto loans. We believe we could be the first in the world to do this. It's the only simplicity is we sat in a room with a set of team with different departments. It took us 2.5 years to do this. Honestly, it wasn't easy for us. We had a hell of a lot of bugs. Ramesh will vouch for it. Every morning we had a huddle meeting for probably months. Anjani will vouch for it. But We got it right, and then it starts scaling up. We're expecting a co-applicant journey in another few months. And that, because in auto business, you have a co-applicant business almost 35%. So if you look at the overall penetration, I think our digital part was parallelly running cutting edge to our physical world, that we have the first right to refuse. Okay, the most important, the home loan merger. So a quick one. I see this as transformational for the bank. ROA, ROE, I think Saurabh, Pramod, his team is probably the best judge of that. And a business perspective, I'll tell you why. And I'm going to talk to you as a business perspective. We've kept HDFC's model pretty much same post the merger. So what does HDFC Limited do in simplistic terms? They ask customers to come over to their 600 odd service centers. They have become banks, but we've kept the insight system pretty much as agile. So customer for his final dispersal in the bank post-merger will still come for these service centers. We'll expand the service center footprint, yes, to make it much more accessible to customers to walk in. What we do normally in all our businesses, we service customers at their houses or offices. Why did we keep HDFC's strength? Because the biggest strength of digital takeaway for any organization, in our belief, is not exactly the first-time customer. Of course, all of us are kind of fighting the battle for the first customer. It's going to be the transformational cross-sell. You know, if you remember, a lot of research reports 10, 15 years used to say that, you know, if this bank, even now, a lot of analysts say that if it does a 1% extra cross-sell, this whole game looks so much different on ROE, ROA. And I think that time probably is arrived. Because if you have a cross-sell at digital, and if you can meet a customer across, then it can be transformational for the cross-sell piece. So you almost have QR codes in all these guys. We are creating a fusion of sorts where when the customer comes in, he puts in an hour and a half, we realized. And I said, I don't want to lose this strength. So 40, 50,000 customers spending an hour and a half with me, where most of them don't pick up their phones today. So imagine if they're so used to coming in, and luckily home is an important product. Your family doesn't mind going and double checking things because it's important document that they're securing with the bank and they find it very comfortable. So our understanding was that we keep HDFC's strengths and overlap our energy and strengths on it. So what are the strengths? Let's just go through it. If you look at the erstwhile HDFC and you look at the bank, their builder relations, HDFC Bank never touched it. So that's a huge strength that straight comes to us, and our energy is substantial quantum with which we're moving in this. In the first 60 days, I can already see a well over 20% plus kind of feel, which we don't talk numbers, but we're getting a massive momentum between the fusion on the sales turnover piece, which I do believe that sales turnover should be an important feel of which way this is going. If you look at HDFC Bank, our strengths which I explained to you, our database of salaried and self-employed, quick turnaround times. If you see Limited, Limited had a couple of days of processing. They had their way to look at things. We have survived with smaller ticket sizes. We had no choice but to get smarter and smarter on how to process smaller ticket size faster, because we couldn't afford to kind of spend days on it. We had to be agile. Now when you merge this, what is the difference between a housing loan or a business loan or a personal loan? I mean, it's end of the day, his forms, ideas, the credit guys are eyeballing it. We believe we will add huge value on the turnaround time in the real sense, on approval as well as dispersal. Of course, it needs a wet signature. In my first slide, I showed you there's a lot of work happening on the digital side. Some bit Ramesh will give you a sense. But the whole idea is, can we be extremely agile? And that's the part we'll add to them. If you also look at the self-employed product, if you look at the HDFC portfolio, the self-employed piece was not their core strength. The salaried was their core strength. If you look at the banking entity, and that's true for most banks, because of the nature of basket of products that you do, your credit underwriters develop a fair amount of cutting edge on the self-employed piece. So as a bank, in the first 60 days, we've already expanded the product basket on the self-employed. We've revamped that product. It's hit the market a week back. We have banking surrogate products, which they never had, just to give you a real-life feel. And these are businesses which can go up by 30, 40%, or almost 100% of the growth over the next 2 years as segments. And that itself could drive the massive overall growth. which today may be just 25% of their portfolio, it can very easily in absolute terms double, and adding a fuel to the next 2-3 years. If you look at the corporate salary, this is, as a banking entity, this is a big strength underlying. This strength gets fully leveraged when you're in control of the product. Because all 200 corporates, you start giving customized offers. That's what the peers and competition was doing. Now bank gets into it. It's important to see how the competition framework changes, because the competition framework also has a huge reliance on mortgages in their books. And we survived without mortgages. And we almost ran similar growth rates. So let's leave the margins aside for a moment. But if you got to fight man to man, and if I get into that game as a bank, and if your dependence is 60% on one product, and we start pumping it up, it's going to be an interesting landscape. This is another important aspect. I think liability, sort of mentioned in the morning when we were talking. 65 to 70% of HDFC customers didn't have a savings account. And as I talk to you, entire country, half the country has got trained on savings and cross-sell. So what are we going to do? Let me first cover the incremental business. So we do this X amount of loans. Everybody, almost 100% of them will have a savings account. Because that's the fundamental reason why not just liabilities in answer, but also in terms of us to communicate with the customer and give him 10x more benefits. Because when you're wholeheartedly with the bank and you put in your important lending product like a housing trust behind an entity, we believe that the entire saving and banking relationship can move to us. And savings is a very, very important thing, even from a bank's point of view, to have great visibility into the customer, offer him a 10 seconds loan. Imagine that auto that I covered to you. Every housing customer life will be fully digital if he takes a housing from the bank. Because he'll have a digital savings account, which we'll open right there when he comes to us. He'll have a digital HDFC securities account, which is fully digital right now. It's just got launched, or it's just getting launched. I mean, we're testing it in the final stages. Your HDFC Sky. So every guy will have a savings. Bulk of them will have a securities account, will have a demat. And this is because it's digital, our confidence is high. Because they're coming onto our center, our confidence is high. Imagine if I did this without the centers, how are you going to reach out to them with that seamless? Then you're dependent on them to reach the online space, your various touch points. So that's the point I'm making, that if you have that platform of limited and you multiply it with this, your strength is likely to multiply in a bullwhig effect. That's what we are hoping. And our confidence seems to be rising and inching every passing month. That's our endeavor. So the multiple products that we are going to sell, we feel that this could be a pretty serious kicker here. If you look at Limited, their cross-sell was all physical, and that was barely, it didn't even reach double figures. If you look at the cross-sell penetrations, we do reach higher double figures. So from a much lower single digit to a higher double digit, and products like unsecured, your furniture loans, we'll give him a consumer durable he can just walk into Chroma and we'll give him a QR code. He doesn't need to call us. He can just take the loan. And we'll have a digital insurance product, everything. So the whole ecosystem of cross-sell is going to be absolutely changing. So whether you had, so the first thing is whether they ran at an X rate. We are very clear that the rate of growth that Limited had, we see a clear bullwhig compounding effect on the rate of growth. In the first 60 days, we can see that happening. So whether your branch network is there, whether we are creating a more value from the builder side, I see the sales turnover clearly taking an upward tick, maybe even 2 notches higher. I see the cross-sell as a very strong opportunity, which I have normally never talked about. But in the housing framework that we are creating ecosystem, your cross-sell looks like a very real thing in terms of changing the game and adding value to the customer. So customer will see this as a convenience. Shareholder point of view, we'll probably gain a clear 2-notch higher on the ROA, is our belief. HDFC was pretty strong in the legal technical. I think that was a very solid strength they had among the various other strengths. Our strengths are risk-based analytics and algorithms. I think these two strengths complement each other. And I think I would rate them very high on this as compared to us, and I would rate this clear 2 notches, 3 notches maybe 5 notches higher than what we've taken over. Okay, so I've kind of stole the next presentation. That just proves I made it myself. So I see a higher sales turnover. I see a better road through digitization. I think this could be a crosser story for times to come, is what we are hoping and trying to achieve. Our optimism is honestly high, so you hear it from me. But every passing month, we are hoping that step by step we grow strength to strength. That's the plan. Tier 2 and Tier 3 cities, I think the India effect is also, to be honest, I think we're not only an attractive industry, we're a fantastic country. For a business guy, it's absolutely brilliant. We follow a philosophy in which we keep 3 tenets very clear. We make sure we have sensible pricing. We make sure our risk is never compromised. Even we go steadfast on digital, no matter what. So temptation never lets us cross those boundaries. And that's kind of a board-approved understanding. And that's the philosophy of the bank that's important for everyone to probably absorb. No temptation in a finance business will ever rock us to take a decision we don't want to take. If I find the market's going crazy on the pricing, we will slow down. If I find a lot of industry reports on the market going crazy on certain delinquencies, you'll find our credit guys will pause for some time, even if we don't have delinquencies. So I think when it comes to money lending, we follow the age-old philosophy of being wise and a little careful. It's just growth aspects. I don't think we have any concerns. We can pump it up at any stage at a faster rate, but we like to be always known as a very sensible market leader. And that we pride ourselves in. So that's very important to share. It sounds like a statement, but it's actually getting followed at the bank. So this is what it is. We want a balanced growth, and this gets presented to the board. The portfolio quality and sensible pricing. If you see our credit quality, and if you compare it, forget with public sector, if you compare retail lending credit quality of your 2 biggest balance sheets, auto and personal loans and even LAP, with peer private banks, and it's public data in the bureau, we are notches better. So every statement that I said can be validated. Yeah. Thank you so much. Pleasure being here.
Thank you, sir. That was extremely insightful. Mr. Ramesh, Mr. Ashwini, please welcome on stage.
Yeah. Yeah, I think it's up now. Okay, good morning, everyone. Like I said, today's session is very critical in that sense that a lot of you wanted to hear what's going behind the HDFC Bank technology, because technology has been the center of all discussions, right? So I just thought we will demystify some of that, and we will talk about what's going behind this whole digital and technology strategy, and how are we seeing the whole thing play out, So with that, I'll just kind of see. So the way we are looking at it is that, there are certain factors playing out today. We are probably one of the most systematically important bank in India. Technology investments will drive growth, as all of you know, and I'll specifically talk about in this slide as to how we are investing into technology in that sense. We're looking at building a bank with technology edge. I think 2 key aspects, infrastructure and security, will continue to be very critical, because you can build any technology framework, but you're a bank and you're a digitally systematically important bank, so you have to be secure also. So there has to be a lot of focus on security. You just can't wish it away. And then application, APIs, and analytics will be the 3 driving force. So basically, it's the security and infrastructure angle, and then the application and analytics will play out. So these are the playouts from a technology edge perspective. You've all heard about digital public infrastructure. I'm sure each one of you we are at the cusp of, or we are rather actually moved to a situation where India is today absolutely digital when it comes to using digital public infrastructure, whether it's Aadhaar whether it is account aggregator, whether it is, DigiLocker. It is a very, very evolving system. And this is a great opportunity. The focus, whether it's been the G20 or the focus at the government level on digital public infrastructure has been very, very high. And the banks have a unique opportunity to latch on to this DPI architecture and really kind of leapfrog the digital journey. So that's what I'm going to little bit cover in that sense. We'll also talk about some of the lighthouse programs. What have we done over the last couple of years and what kind of programs we have rolled out? And then how are we getting ready for the next 100 million? That's the future vision. So that's pretty much what I'm covering from a coverage perspective. This is a very telling slide. I just want to stay on this slide. See, everybody thinks, when you think volume, you think, the GPays, the Paytms, the Zomatos. We do about 60 million transactions. We do about 6 crore transactions a month. Actually, 6 crore customers touches. They're not transactions. 6 crore customers touches every month, actually. That is like a very, very big tech equivalent. So we are a bank which is like a big tech scaled volume. And that's why our technology has to be very, very differently. We are not competing against peer banks, private banks. Those days are gone. We are competing against these kind of players today, literally on this scale. And mind you, we are one of the few banks which is kind of, I would say, gone to that escape velocity. And why is it important? Because most of the public sector banks are not the volume scale. Some of them are distributed in their architecture. Now, this is a bank where everything is kind of digitized and kind of, in that sense, technology-led. So there's a subtle difference. So that's the volume you're seeing. So 6 crore is a fairly big volume. And just see what do we do with the ecosystem. We do about 17% of the RTGS transactions cleared in the country. We do about 13% of the NEFT transactions, about 11% of UPI. Just in terms of merchant acquire, this is mind-boggling numbers, okay? 45%, which means every second click on a merchant e-commerce is practically on our gateways. Then if you look at it, about 28% of CBDT collection. It's huge. I mean, just from a national perspective, right? And then about 45% is settlement account for brokerages run through us. 55% of payment collections on mutual fund happens through us. And we have around 40 plus fintech partnerships. So this just to give you a sense how digitized we are today. And if you see some of the new experiences creating, I'm sure all of you are tracking this. I don't know if you've ever looked at the Tata New Association, the Paytm Association. These are embedded applications. These are not even like, clunky interfaces. So if you today go to a Paytm and you want to apply for HDFC bank card, it's a completely ubiquitous experience. Same with Tata, Swiggy card. I don't know how many of you have tried Swiggy card. At checkout, you actually get a card. So you can go to Swiggy checkout and pick up a HDFC bank card, literally. That's how we are digitizing and embedding ourselves into the digital journey. So very, very interesting play out of how digital and technology-centric the bank is today, from the volume and the scale perspective.
So just a comment here that this bank looks 83 million plus subscribers in the physical world, but we have about 60 million people interacting with us digitally, whether it is for onboarding or for servicing. Is this on? Okay. So while the bank has 83 million plus customers, if you look on the digital side, we have 60 million plus of those customers interacting with the bank 100% digitally. And bank does very simply 3 things. Onboarding of a customer, can that be done digitally? That has friction points like KYC and underwriting. If we can crack that, then most of the people can come digitally inside the bank. Then the second thing is transactions. Can we enable all our customers to transact digitally from wherever they are without coming to the bank? They can do it from their mobile phone, from the internet, anywhere they want to, they can transact. And the last piece is servicing. If somebody wants to change the address, you want to change your mobile number, you want to add a nominee, can all those things be done digitally? That is the third piece of it. And if we look at it in our bank, 60 million plus customers are serviced, onboarded, and they are transacting 100% digitally. So that's the size, that's the big tech size that we are talking about for a bank of our scale.
Next one. Can you go to the next slide? Yeah. This is a very telling slide. A lot of you would be very interested in this slide. How much do we really spend? Is technology spending, quite in line with the market expectations, right? So if you see, I've just tried to put a simple chart. I've not shared the actual numbers because that's part of the book itself. But if you see, we are kind of constantly, so we moved, and but the way we look at this slide is very interesting. There are two aspects to technology spending. First of all, it's not an expense. We clearly believe it's an investment. And the way we look at technology, expenses on two fronts. One, we have a running expense line, which is how much do you spend to maintain a technology platform? And how much are you investing in changing the technology platform? And mind you, there's a very fine balance, because while you're scaling the bank, you need to ensure that the existing bank runs beautifully. So whether it's obsolescence, capacity, security, that has to be continued. You continue to spend. So if you see here, we've been growing on run the bank. The blue band is run the bank. So we are growing at about 2x in that sense. We're spending 2x almost on the run the bank. But just see the change the bank. We are going to about 2.7x. So very strategically, the gap will widen, but not at the cost of letting the existing bank go down. So it's a very interesting way of how we look at our technology spends. Digitization of the journey, like Anjani spoke about, across each of the segments, if you see significant shift, whether it's acquisition, transaction, servicing. And then how do we look at this cost also? 41% of the cost goes in strategic and innovation. About 31% goes in digital co-creation. Compliance and security is again very high, needless to say, as a regulated entity. Deeper distribution is about 14%. And the run the bank maintenance is about 51%, infrastructure is about 28%, professional service is about 21%. So, and what is the employee strength? So we have about 3,100 people who run in the technology firm today. And if I had to look at partner, staff, we are about 10,000 people technology organization. It's a very large technology organization. A lot of you may not get the context, and just see the at a very high level, 26% is a CAGR growth on the technology spends, and about 8.2% of the investments as a part of the revenue is what we spend. We are moving into the global bracket. Just to give you a little perspective, most of the Indian banks started at 4-5% of the revenue at tech investments, and have significantly now updated. We are at about 8%, 9%, which is a global benchmark that people look at it. So clearly, the management is very aware that this is the area where we will see most of our investments coming through, and this is going to be central to our future strategy, so to say. Okay, now this is a very interesting slide. I just thought I'll put it now. Not everything that you see is only front-end engineering. Just having great apps and talking about quick, digital apps is not good enough, because frankly, you're running a larger bank actually. There are lots of pieces that go behind in running the technology. And the way we look at it is on 5 pillars here. What we call as core modernization. Why is it important? Just want to spend a little bit of time. A lot of you may not know, finally, the core banking runs on a single database. That across the banking world, the database technologies are single. So what happens is every single transaction, it's a 5 rupee UPI transaction or it's a 100 million treasury transaction, everything hits the same core banking. And what happened was that banks did not realize this. Banks built core banking 20 years back, and they continue to run an architecture called monolithic architecture. What it has resulted is that suddenly the floodgates got opened up when the UPI system came in. So suddenly from 10,000 transactions, you have moved to 10 lakh transactions in a period of, let's say, a year. How does the core banking take that load? So if you don't modernize the core, it's a very foundational aspect that we have to look at it. So there, if you see, we started a work. So see, we kind of hitting almost about 2,500 TPS, transaction per second on our UPI. I think we will go up to about 5,000 in next 1.5 years. That's the pace at which it's growing. And if you don't modernize your core, you will be in trouble. Then, of course, middleware. Then comes the middle part of the bank. So core is at the center. Then comes the middle, which is where we are slowly kind of doing digital journey. Arvind spoke about personal loan, auto express loan. So we created about 30 journeys like that today digitally. So if any of you are going through the bank's site, you can just do a QR code scan. You can go to a bank website. And about 30 of the journeys, PL, BL, HL, loan against share, opening your savings account, liability account, deposits, you name anything, everything is digitized today. So all of this is available on the go actually. And that's what we are slowly kind of doing, and we are taking it to much more extreme engineering. What we are saying is just making digital apps is not good enough. Embedding them into the other partner model is very critical. Because the world is moving to an outside partner kind of a model where a lot of digital assets will be created. And the banks will get embedded, and that's what we call as banking as service. We'll talk about that later on. Then, of course, we've seen a lot of talk on customer intuitive application. Why do our apps don't look good? Right? This is a conversation that I'm sure a lot of you have had, and I want to take that on. No point in doing just the UI UX unless you start the first two, right? So we've started the journey. So when you launch a new app today, it will be very well built on core, it will be built on middleware, and then it will be built on the front end. All three aspects play out. I don't know if any of you have started using PayZap here. It's one of our new apps. Take a look at it. It's very intuitive, getting good reviews in the market. We've kind of touched 4.8 on Play Store. The only other app is Cred app, actually. And if you see the kind of features, I mean, it's the only app which has a tap and pay, which has a swipe and pay. It's got a very nice, intuitive personal finance manager. A lot of interesting stuff. And it's also linked to our earlier, app which used to be for shopping, which is basically something, the Smart Hub app that's kind of integrated now with the PayZap app, actually. So it's a very interesting app, completely rewritten. And one other thing, all of these new apps is built on cloud. None of them are basically, and that's what we are saying. The four foundational is APIs, cloud, data, and security. So if you are building your technology architecture on those four principles, that is when things will move. And we are probably one of the few banks which has adopted cloud in a very aggressive way. Just to give you a perspective, we work with Google, we work with Azure, with Microsoft, we work with Amazon, and all of them equal. So there is no kind of concentration with one cloud service provider, and we are also building our own private cloud today. So very clearly, a lot of thoughts are moving in that direction. AI and ML, machine learning, is very, very key, as Arvind spoke about it. We are doing a lot of work here in terms of our ability to do pre-approved offer, our ability to do credit using machine learning. That's very fundamental. What are the other areas? We are also looking at machine learning from very different aspects. One is credit, fraud, which are typically risk management areas. But we're also looking at generative AI. For example, can you really pull out statement narrations in a prompt engineering basis? Right? World is changing. Today, why do you have to go and, if you have a simple statement, you want to kind of just run a query on that statement using a prompt, that's as simple as that. So we are also looking at very simple use cases to use generative AI. Not just, while we do back-end machine learning for security, fraud, risk, but the front end will be largely driven by generative AI. So it's a very interesting play out that's happening. And then the last piece is very critical. So while we do all this, mind you, each of the physical branches is getting very, very rapidly digitized. And what do I mean by that? We have recently, you may not see this, one of the proponents of the branch distribution, most of the branches work on a very rudimentary architecture. They run on something called MPLS, which is called multi-protocol label switching. What happens is every bank has to be wired with two service providers, whether it's a Bharti Jio, Tata Jio combination. And these links are very expensive, and they go and sit a central place. And then on top of it, you have to run it with switches, routers. These are very expensive. So what we are doing, in fact, we are working very interestingly with a company called Zscaler in US. It's a very, very intuitive company, and we have completely taken out the closed network and moved our branches to connect on basic internet with the security. And this means the branch costs have started dropping, and the speed to go to a branch. So it's like a four or five people digital branch. You can kind of quickly put these branches, and the cost also comes down. This is what is happening in the technology world. You don't see in the front, but a lot of these branches are going digital now. We've done about 500, 600 branches over the last 6 months. We will do our 7,500 branches very rapidly onto this back-end kind of engineering. That is also going to give us both cost and speed advantage, clearly. So lots of work happening in this area. And like I said, on the security side, just to be again clear, we are very high on security. We follow a concept called zero trust architecture. There is an independent assessment score called BitSight, which kind of, we are one of the highest in the banking world, across the world actually today. And mind you, a lot of these things don't come in the front. but there's a lot of attacks, a lot of exploitation that keeps happening because we are a very large system and we have to prevent this much well in advance in time. So secure, and that one of the things that as investors, you have to look at, and it played out. Digital can have its own problems because if you are not secure enough, the bank can go down. A ransomware attack, a hacking attack can really technically take down the bank. So sometimes you have to look at what is the security posture. That's why it's not easy to just put digital infrastructure like Arvind spoke about. You have to build all the angles in a digital infrastructure. And that's why you have to be very, very clear that don't rush through when you put a product in the banking world.
On the digital public infrastructure side, we've seen that India is creating a lot of public infrastructure. One good thing which is happening is it is enabling financial services reach the last mile, and any citizen in this country who's qualified will be able to get serviced properly digitally through using the public infrastructure. If you look at it, Aadhaar and DigiLocker came up as the first ones, and how are we using it? We have about 4 million users monthly who are getting onboarded using these services. 25 million transactions are happening using APS. Which is a national infrastructure which has been set up. Credit on UPI, this was just launched recently at the Global FinTech Fest. PayZapp was from HDFC Bank was one of the first 3 apps to be demonstrated over there. What it does is it extends the credit reach to any customer in this country who's using UPI. So just imagine you go to a shop to buy a refrigerator, you are scanning a QR code. The moment you scan a QR code, there are now 3 options. One, you use your bank account to transfer the money. That means you need to have the money to buy the refrigerator. Second, if you have a RuPay credit card, you can pay using the RuPay credit card. In that also, there is an alternative now that if you want to not use the credit card but take a 6-month, 9-month, 12-month EMI, you can transfer that, you can convert that into a loan on the fly while you are transacting. And the last option, which was just launched, is that every bank has a pre-approved base of customers who get a credit line. So there are customers in our bank who have credit line but who don't have a credit card today. So they will be able to use that credit line instantly to make that purchase. And across the banking world, almost all banks have credit line. It all gets exposed over there. So credit is getting delivered at the point of sale in a very easy and seamless manner in form of a sachet credit, which is really small. Account aggregator is another big innovation that has come up, and our bank is using it significantly. So when a customer comes to take a loan, you typically ask for a bank statement. If the customer belongs to the bank, we get it directly. But if the customer is not with the bank, you are banking with some other bank, customer has the ability to pull that instantly and give it to the bank for underwriting purposes. We are a big user of that. We are seeing about 100,000 people come and take that service directly. So they are giving that consent to the bank to transfer. Likewise, on the lending stack, there is a huge amount of work which is happening by the government. RBI is also enabling. What it does is it brings alternate data for underwriting. For example, we are able to underwrite a milk farmer and give that guy a loan to purchase livestock, because we get data how much milk is that farmer pouring on a daily basis at the milk society and what is the rate at which he is getting it. If that data comes in, we are able to underwrite. So we are able to give 2 lakh, 3 lakh worth of loans to buy cattle today in the market. And this has got huge opportunity because the data for underwriting doesn't only belong to the banks. There are data which is getting created at every point in the country. It is at point of purchase, point of sale, where people are pouring in. All that information is getting pulled in. So this is the first step. In the lending stack, we are getting the milk farmer data, but land records are getting digitized. So any farmer who has land wants loan, and if the digital record can be pulled and established, so it can be tokenized and loan can be given there. So there is a lot happening on public infrastructure on the lending side. Voice enablement, we've now got Bhashini. We've got the ability where a customer calls a contact center. I don't know how many of you have called recently HDFC Bank contact center, but the first port of call is a voice bot who's talking to you. And if you say, I want to block my credit card, what is my outstanding? Largely, it's the bot which will do that in your preferred language. So this call doesn't even go to an agent. So today we get about 3 lakh calls a day. And out of that, only 1 lakh call goes to an agent. The remaining 2 lakhs are handled by machine, which we call digital deflection, and it is solved completely over there. So that's the kind of capability which is coming in. And lastly, there are light apps which are emerging, where even if you don't have network connectivity, you are able to pay. What Ramesh mentioned about tap and pay. Now, even if the merchant and the customer has no connectivity, it is possible to transact over there. So these are the kind of capabilities which are emerging, which will transform and drive the growth of financial services in the country in a big way.
And this is very critical, because this is how the India is changing actually. So if we see whether it's merchant segment, whether it's agri segment, whether it's basically mid-market tiers, everybody is getting covered through the DPI. This is where, and this is not just us talking across the industry. This is going to happen, and banks which can digitize and use the digital public infrastructure are going to be the leading players in that sense. Let's move. Okay.
These are some of the programs that we are implementing using the technology that we have got right now. Arvind mentioned about the Express Car Loan. This is one of the largest platform in the country where we are issuing car loan in a matter of 30 minutes to an existing to bank customer and to a new bank customer also. You can come and take loan. Likewise, we have got, I'll start with PayZapp. We've got 3 million customers now. If you have not used it, you must try it out. This is completely built in India, 100%, and we have got the best of the capabilities on it from payment perspective. And you will shortly see the credit also appear on this. Smart Hub Vyapar, this is a merchant app where if I'm a small dukandar in Ghaziabad and I want to become a merchant, I will download this app on my smartphone. And once I register here, I have the ability to accept any form of payment, whether it is a credit card, UPI payment, and I've become a merchant. My account resides with HDFC Bank in the current account. And I have become a merchant. Once I start using it, bank can also underwrite based on the data that is getting generated. So you can get a weekend loan, you can get a loan for 1 week, 2 weeks. We've got about 1.5 million customers and merchants across the country who are using this. Purely on the basis of 1.5 million, we have transactions which takes us to amongst the top 3 in the country. As it keeps growing, we will see transactions improve much bigger from here. We've also got digital currency, which is the CBDC. This is essentially a currency where a tokenized currency resides on your phone. So you can get 100 rupee worth of note in your wallet, or you can get 100 rupee worth of CBDC token on your phone. You can go to a merchant and pay with this. Today it is somewhat being used like UPI transactions, but in UPI the note still exists. It's just that it moves from one bank to the other. It moves from my bank account into merchant's bank account. So there is a lot of plumbing happening. Here this is a token. It flies from one phone to the other. And it is completely anonymous. In UPI, most of the time we see that the merchant knows your mobile number because you've used it. In tokens, those things are not happening. Likewise, we are also launching HDFC Sky, which Arvind mentioned about. This is a brokerage platform for transactions. If you've not tried it, this is again available on our app store. You can download and see how this works. Smart Wealth, which is a portfolio management service and advisory service, which is available for customers. They can buy mutual funds, they can balance their portfolio using Smart Wealth.
In fact, this is one app that you might want to talk about, because it's an exclusive wealth app, to the extent that you can even pick up your cash statements on a daily basis. So today, a lot of you would be doing that, your cash statements, you take it out, upload and put it into PFM. Actually, the mobile app just takes it directly from the cash and across the banking. So it's Demat, equity, mutual fund, everything is in one place. It's a separate app for wealth management, and we are quite hopeful. Just launching this in next 15-20 days, you'll see the launch coming. But it's absolutely newly revamped. It's not same as our existing mobile apps. It's exclusively for the wealth management streams actually. Smart Sathi is one other program we want to talk about. I'll not spend everything, but we do about 30 programs this year. Just in this year we launched. Smart Sathi is a very interesting, when customer, we service through business correspondents. As you know, a lot of banking in India is happening through business correspondent, not necessarily through the branches. What we have done is we have digitized the entire business correspondent distribution network. So the village level entrepreneur can actually just, it's like a bank in a box. You download the app, you register as a small firm, you can register as then your agents onto that platform, and then you can source all the applications of the bank and get a commission on that, which is the classical BC model. But we have completely transformed. In fact, the platform has been embedded into CSC applications, which is very interestingly kind of now going into the distribution chain. So we have about 16,000 CSC installs. It will go up to about 35,000. And every single branch, rural areas where we don't have a branch, will still have a kind of a bank in a box kind of a thought process. So these are some of the interesting, we also do a lot of engineering work. I'm not covering, but a lot of work in terms of how to fast track UPI transactions, make them more fail safe and stuff like that. A lot of work on API orchestration. So it's not just the functional side, but even on the technology engineering. So we've created these. Most of our new technology is created actually either co-created with fintech partners or places we have started developing on our own. So we have engineering teams developing on our own actually. So that's the fundamental change that we have made from just buying technology products to actually manufacturing technology products.
So we'll go to the last.
Yeah, this is our last slide. It's an interesting slide which you thought. See, what happened is traditionally the banks always used to look core banking at the center. And then data used to be overlaid on that. Then you used APIs to put the channels together, and then partnerships used to come. See, this is a very product-centric view, right? I mean, you're always looking at what a retail assets would do, or a retail liabilities would do. What we are saying is that the future is where the data is moving in the center. Because once you know a customer and you don't know him as a product, the whole game changes. So in fact, we have embarked on a very large project of moving our entire data warehouse into the cloud data lake actually. And every single business is pivoting to that data lake. And what we are doing is that data lake also has an API to feed. So every time you want to hit a customer, you can pick up a data point and then go back. So that's how you will do personalized cross-sell. You will use AI/ML. So this whole game has changed with data being in the center. And then you have this microservices core, which means core is not one single. I spoke about one monolithic architecture. We are breaking it up into smaller through a program called Holodeck Core. And then, of course, the API orchestration channels. And finally, we go to the edge as banking as service. So it's a very new way of looking at the banking vision. And we believe using this, we are moving to a fully cloud native stack, which is always active. We will move to a zero trust security framework. We are modernizing apps that are intuitive, agile, and secure. And finally, we want to become a bank that becomes actionable insights on the go through this data, through this new approach. So this is largely what we wanted to cover today. I just hope it gave you a good insight. The bank is very, very technologically sound and very foundational, and a lot of work is happening. We're not someone who kind of go into the market and do launches. We do a lot of things at the back end and be ready and then go to the customer, because long-term, like Arvind said, the same philosophy like in credit, you have to have a long-term scalable sustainability. It is not about just putting the apps and putting it in the media. It is about building those apps and building scale on them. So I think it's a very interesting technology, will be very center. So I just hope that we were able to cover most of the points. So thank you for the opportunity.
If there are any questions, we'll be happy to take Arvind, Ramesh.
Yeah, can we have the chairs on stage? Can we have Saurabh and Tej also on stage, please?
I think just to mention the cue cards. So that
Cue cards are already
okay. Fantastic. The questions are already coming through. So fantastic. So I'll find a shortage of mics. Right? We have enough mics.
Just ensure you press it so it's mute. You press it again, it's on.
Go on, please. So Tej is going to start with the question.
Hello.
We can take a seat with the questions. Go on, Tej. So, folks, keep your questions coming, and we've got the tech gurus from HDFC Bank. Thank you so much. 10% of the money of the good folks over here is entrusted with you guys. So glad to hear that this security is at the forefront. Over to you, Tej.
So the first question, given that we have investors here, is around ROI. How do you measure ROI on your tech spends? Given that you've all spoken about the various initiatives you've taken, how does this translate into business metrics? And how do you measure the ROI on all of these tech investments?
Okay, I think I'll take that. See, each of these tech investments, that's a very pertinent question, I mean, would ask, because sometimes you can just be blinded by the fact that, oh, I will go and spend on every single technology program and compete in the market. That's not the reality, because you need to get the value for the money. So what we do is, there are very clear metrics on every digital channel once it gets rolled out, and what are the program KPIs. In fact, Arvind has a very clear target, for example, on auto loan or an express car loan as to what the business would deliver. And we really go into the depth. So before even approving a program, the financial control team gets involved and they look at what the ROI structure on that particular program is. And then, after a lot of deliberation, the program goes live. And then once the program goes live, there is a metric and there's a proper forum to kind of review whether our digital investments are giving the ROI that we're looking for. So I don't know, Arvind, if you want to add anything on this.
I think in any organization, if the digital and the technology is driven by the business guy, this point gets taken care of. If you try and run it another way, where the two friends of mine were to launch something where the business guys don't have a complete buy-in, then I don't think it sees the light of the day. So most of the initiatives that you saw, lots of them, almost, over 95, 100% of them virtually get originated, are driven, conceptualized, incubated by the business teams. So the business teams have a very clear vision on that road ahead. It could be a vision vis-a-vis the technology around in the market. It could be a vision vis-a-vis customer convenience. So the ROA is embedded from the day one when we start. As a matter of fact, if you meet a finance guys, you should tell them to go a little easy, actually.
So, one thing is the future of digital is about experience-led growth. Somebody who gives a better experience will be able to attract more customer, drive adoption. If we look at from that perspective, take the example of Express Car Loan that Arvind is launching. We have built a technology which allows any customer to take a loan, auto loan from HDFC Bank very simply. You can do your KYC, you can do your underwriting, and in a matter of 30 minutes, that loan can be disbursed. What does it do to his business? It drives adoption. He is able to get cost to income in control or improve it from where he is. So those are the metrics that we are using on all programs that we launch.
And solving customer convenience, creating a customer convenience or solving his problem is the focus. We are not like every morning wake up and say that, investors are asking us what we're doing on technology and then work backwards and we got to stay up the chart. Every morning we wake up and see how can we make the customer's life better? And can that create a business proposition for us? And then technology adds to it. And that's how banking works.
So Arvind, Salil Desai is asking, saying that as you guys roll out more branches, right? I think we've heard 700 per year is the target. Presumably there's a cost associated with the branch rollout. And I think Ramesh's slide showed that the tech spend has gone from 6 to 8.5% of revenues, right? So you've got parallel cost structure burning away. There's a physical cost and there's a tech cost. Doesn't that end up being a squeeze on profitability?
I think it's important. I'll go back to, I think, Saurabh, your opening slides on the optimism of India. I think as a bank, we share that optimism. We understand risk. Now, the question for any company at this junction is, do you want to gradually scale up and look at just a 2-year perspective and 2-year perspective? When you see the tier 2 to tier 4 cities, virtually from a business opportunity point of view, bursting out of the seam lines. And I can see the credit quality is very granular, it's very retail, the retail lending is a favor. We have just taken over a company which makes us extremely strong on the vector of the mortgage side, on the household side. The digital ecosystem is transforming. I think there's a great window for the next 5-7 years of this physical branches where a whole lot of government and senior citizens have money who still need a physical touch point, is our understanding of the market. And if you want to really capitalize the true India, I think there's a need to balance the branches and digital. I think the good part in my limited view is that if you notice carefully, Ramesh's points, to my eyes as a business, doesn't only signify cost, Saurabh, it also signifies a level of preparedness for digital, is the way I would look at it. And if you look at the opportunity capitalizing on the front end and the branches, we've always historically been very strong at our physical cross-sell. Imagine if you empower these guys with digitally, there'll be a lot of transition phase between fully digital to from a fully physical to a fully digital. And that transition phase could run for half a decade or maybe a little more. And I think that's the opportunity space.
Sir, just one small take on that as well. See, there's also a behavioral thing. A lot of stuff is talking about digital. See, our kids, young generation, one stop, they are able to do digital. But there is a lot of India that needs assistance. If you see in even our digital journeys, we have something called an assisted model, where a DSA, a business correspondent, actually sitting in front of the customer and helping him. Second time, maybe we'll get it right. But it is very important, in that aspect that you keep the assisted part, especially in marketplaces, in the middle of bazaars. Just having a brand presence is a very, very critical aspect of this whole discussion. Yes, at the same time, like I mentioned, we are trying to see how much we can drop the cost there. And also our branches are microcosms of a larger, we don't have any centralized offices in tier 2, tier 3 cities. In fact, we just use the branches as offices for all sorts of people. It's not just a retail liability team. I mean, Arvind will tell you his own team is also sitting in these branches. So I think we believe that it's a very good strategy to have both. There's a presence and an engagement all the time available around the corner, but everything is digitally enabled.
So just to sort of echo this, and I think I'll join this with the question Jinesh Gala has asked. Jinesh is asking, I think, a related question, right? Why roll out 1,500 new branches every year if digital is such a big deal? So I'll give you sort of one of our anecdotes from a trip. I think this was a trip to Nashik a couple of years ago, just after COVID had ended. And we went to see some of our investee banks. And what we learned from the other private sector banks, interestingly, we didn't go to an HDFC bank in Nashik. What the other private sector banks told us is by branch count in Nashik, these guys were behind ICICI Bank. I think Kotak was a little bit behind you guys. But in terms of CASA sweep in Nashik, even though you had fewer branches, significantly fewer branches than the other private sector banks, these guys were the CASA powerhouse. Nashik is a prosperous town, big agri center. The figure we left Nashik was something like 30% of Nashik's CASA was going to HDFC Bank branches there, even though they had fewer branches. And I think therein lies the nub of it. We can ask them for numbers, they'll deliver numbers, but the proof of the pudding will be how successful are the branches that they roll out. The combination of branches and tech, can they pull in CASA? The first 3 months of this calendar, you did quarter, right? 1/4 of India's CASA came to you guys. We got a little scared in the first quarter of FY23, I have to be honest. If they can do what they did in the first calendar quarter this year, HDFC Bank pulled 25% of the nation's CASA. And in a way, that's when my mind went back to my Nashik trip. And if you can do that consistently, we'll be very happy. You guys also will be very happy.
Another important aspect, Saurabh, is that, see, a lot of banks are pricing themselves for deposits. We are that way always maintained our prudence, which gets missed out. So it's important to see the balance that we probably do, whether it's deposits or lending, we try and force a balance. It makes it tougher, but that's the whole idea to move in the wise band.
It's become fashionable to do SA at 7%, savings account at 7%. And these guys haven't done that. Tej, over to you, next question.
So we'll take one last question from Vivek. We'll get answered all your other questions on email, given we are running short of time. The question from Vivek is, anecdotally, when we experience HDFC Bank at the branch or when we use HDFC Bank app UI, our experience has been largely inferior, especially in the last 3 to 4 years. How do you take in customer feedback and have dealt with this anecdotal experience?
So I'll take, because I covered that in the presentation, right? See, it's one thing to put just the UI UX layer and say we're great looking app, okay? And it's another thing to do the entire back-end plumbing and make it ready for the scale that we're talking about. And like I said, if you've just looked at our new experience, whether it's Express Car Loan, whether it's Pays app, whether it's the Merchant Hub Vyapar, you will see all of them coming with a very new look UI UX. There are two North Stars which I want to cover here so that everybody gets a, see, mobile banking and net banking is a very important asset for the bank because all the eyes are on those two assets. And we've had kind of technology that's going back to 3 to 4 years from that perspective. And I covered that. We are rewriting our entire mobile app from scratch actually. You know, and it's not just an effort to put a UI UX cover on it. And you will see a launch coming up in first quarter of next year, where the entire mobile and the net banking of the bank is changing to a new gen look UI UX, and not just a new look UI UX, but the technology behind it is massively scalable to be ready for that 100 million that we spoke about. So I think it's very, and we've also started learning, like I mentioned, we have a factory in Bangalore now, in Delhi, in Mumbai, where there are engineering folks from PayPal, Amazon, and companies like that who are coming in, who have a very different view of looking at the assets. That's why I said when you're moving from a technology buying company to a technology manufacturing company, the UI UX and the design aspects would be a very endemic part, and we will build it in a holistic way, so to say.
And one more thing which is there is that, you know, digital world is going beyond net and mobile banking. It's getting embedded in where you are. So if you are using UPI for making a payment and credit is available there, you will not go to a net banking to enable your account to come back and then make a transaction. Customers want bank to be present where they are, and which is going way beyond net and mobile banking, and that's what we are doing. So today, if you are chatting on WhatsApp, I don't know how many of you have tried the banking services available on WhatsApp. We are present on WhatsApp, and most of the services that you expect from a bank is available over there. If you call up a contact center, there is a 24/7 voice bot and agents who are trying to serve that. If you use SMS, you can get a lot of merchants across the country, they do their banking on SMS. This is a realization for us as well, the kind of adoption which is happening. The adoption which is happening all across these touch points is very high, and that's how we get to that 60 million, and which is going beyond what net and mobile does.
And just one last piece on that is, if you see the last slide, we said banking as a service is the outer corner. Because you cannot go back to monolithic super apps and hope that everybody will come to your app. And one day that app crashes, you will have a different problem. And just finding the menus in super app is going to be difficult. So what we think is, while we will build, and you will see a very nice mobile app coming up, but you need to build very large number of digital assets which are getting embedded into other partners' journey. That's why I spoke about the Paytm, Tata Neu, Swiggy. So I think the strategy has to be a little bit more broad-based, if I can put that out.
But it's a good feedback, nonetheless. Yeah. We take every feedback on a war footing, and I think some of these thoughts that they're sharing is more conceptually how we look at it. But I think there's a real world out there. It's a competitive landscape. You'll have to be scoring at every junction, at every point, all the time, because it's constantly transforming. There's no choice. We're in it to be ahead of the curve in all times sensibly, but yes, this one I think we got to make it better than where it is.
Thank you, sir. Thank you very much. Thanks, Ramesh. Thanks, Anjani. And thanks, Arvind. And thank you to HDFC Bank.
Thank you so much, Phil.
Best of luck with the merger. Thank you.
Thanks for having us.
Thank you.
Thank you. May I request Saurabh to please felicitate our guests? Thank you so much, sir.